Okay, Meta platform Q1 2026 results. So revenue grew over 33% year on year. Net income grew over 61%, while operating margin grew over 41%. So you should be asking yourself, why is operating margin lower than the net income? Something happened we are going to explain, because naturally the margins are supposed to look, naturally gross margin is supposed to be higher than operating margin. Then operating margin is supposed to be higher than the net income margin. But something can happen, which is why we do this analysis to explain. So let's dive into the numbers. So before then, let's look at the books. So this is the chart of Meta. Currently, it is trading around 582 or roughly 583 US dollar. So you see from 2020, 2013, you see the trend, you see the dip, you see the COVID dip, you see this dip was when 2023 is when US first started raising rates. You see the runs, you see stalling out at the top, you see the highs of $800. Now this is where we are. This is just how the technical chart looks for the 1 month. Then let's look at this is the income statement. So below Europe, you see the Q1 26 and Q1 25. You see how revenue grew from 56 billion to 56.3 billion. Before it was 42.3 billion. So you see the growth. Then you see the EBIT, that's operating income. You see over 22 billion in operating income. Then research and development is also growing and other stuff like that. Then you will see what changed there. Then income before tax, this is what it was. Then when you apply the tax, so there is a tax gain. That is why instead of the net income going down, the net income, so the tax gain was added, and that tax is called, we explained it here, but it is called the CAMT. So that CAMT tax, so it's a tax gain that affected. It's called the corporate alternative minimum tax. So the government review, it can go, so it's a tax benefit they enjoyed. So it's now re-rated the book, and net it became a positive. So that is why you see the net income growing more than the profits, operating profits. So that is it. Then you look at the margin side of things too. You see the gross margin, the operating margin, on which we have explained already. You see the research and development. You see the gross margin dropped compared to previous year. You see the operating margin also dropped compared due to the research and development. We have explained it here. Then you see the net margin now, which is the one that could benefit driven by tax benefit. Then research and development too going up. So, but it's more of an AI play. So more money flowing in the other direct shares and stuff like that. Then let's look at the balance sheet. Then if you look at the balance sheet side of things, so the balance sheet is overlaying 2025 December and March 26. So you see that the assets grew more over total assets grew. So the business assets grew over 7.9%. Then you see the liability side of things. When you look at the liability side of things, where are you? Okay, you see the liability too also grew. Then equity of the business also grew by 12.2%. So, but this lease is doing some hiding, and so let's just go to we have so many off balance sheet items though, but let's go to so the ratios are, even though it declined a little bit, but it's still liquid. It shows liquidity. So these are showing liquids. Again, the debt to the equity side of things also pretty well balanced. So it's a pretty well run business. Then the return on assets also very good, but we did not analyze it. It's just a quarterly on. So if you analyze it too, even though you don't know what will happen in the next quarter, but it looks pretty okay. Then this is the cash flow side of things. So you see the operating cash flow, the free cash flow. So the free cash flow it grew to over, for this quarter, grew to over 13 billion. If you analyze, you'll be getting within 50 something plus billion. So making sense. So let's now give you the facts behind the numbers. So number one is that you know the revenue. So you can read up more here. So you see that revenue grew overwhelmingly through operations. So you can't dispute that there is tax benefit. Also, in the times of revenue, you know they sell. They have two segments. They have the family of app segment and the reality lab segment. So the family of app, that's where you find their advertising business. With the advertising business, two things happened. The volume grew, so more people advertise in the platform, and secondly, the pricing also increased, so which shows strong resilience. So both from the volume side and the pricing side of things. Then the family app segment of the business grew by 33%, but the reality lab is dropped by 2%. So the family of app is still carrying the business. Then geography wise, you know, their business is almost everywhere. US and Canada, there is a growth in revenue. Revenue coming from US and Canada grew over 29%. The revenue coming from Europe grew over 39%. Revenue coming from Asia Pacific grew over 29%. Then the remaining ones, they classify it under rest of world. So we should be the side of Africa, and all those things that are not captured there grew by 40%. So generally, it is a broad-based revenue growth, not the one that's maybe tilted or swing to one side. So it's a broad-based growth. Then there is a litigation case, even though it will be tried in September. You know, they sue these businesses for one thing or the other. So this one is coming up in Mexico, and the damages is sitting around 62.85 billion in damages or claim. But until they put it out on court, then we know if it will hit the books. Then some other things to know, which are all balance sheets. Some is coming up, some is still not coming up, some are not. The commitments are not yet here. It means that we have 28 billion residual value guaranteed to the joint venture in Louisiana. We have a lease that has not come in, that is sitting around 182 billion. We have a cloud purchase obligation, which they have, that is sitting around 14 billion. So these are some of the things you need to know. But the summary side of the whole business is this. Remember, the massive expenses going on revenue. That's why we say somewhere here, we say that the Q1 CapEx grew. That's capital expenditure grew by 47%. But here is the play now. The variables that we watch, number one is the effective tax rate. Remember, because of this CAMT, which is the corporate alternative minimum tax benefit, it's reduced the tax rates. So, and it's more of a one-off something, it's not repeatable. So when it rolls over, and number two is to see if their AI play monetization scales so fast to cover the infrastructural cost. So we'll be looking forward so that it won't go and compress the family of apps margin. So we'll be looking forward to their Q2 2026 result to see how things pan out. So this is it about Meta. See you on the next one.